All right, the time is 7 p.m. We'll go ahead and call this meeting to order.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Madam Clerk, could we have a roll call, please?
Mayor Pulaski?
Here.
Trustee Delapenna?
Here.
Trustee Domke?
Here.
Trustee Forsythe? Here. Trustee Lanisa? Here. Trustee Prokowski?
Here.
Trustee Trejo?
Here. And we have a quorum. We'll move on to presentation of the prepared agenda. Is there a motion to approve the agenda?
Second.
Any discussion? Seeing none, all those in favor, please signify by saying aye.
Aye.
Opposed, nay. Any abstentions? Seeing none, that motion carries. Now move on to Village Board public comment. Anyone wishing to provide comment on a topic or an agenda item may address the Village Board during the public comment and public hearing segments of the Village Board agenda by submitting comments in advance using the online form or during the meeting. Madam Clerk, do we have any submitted in advance?
Two in advance. The first one I will read from Mary Rice. I contacted the board back in February 2021 about the possibility of some type of accommodation for multi-unit complexes to participate in food waste / recycling pickups or drop-offs. Many cities provide creative methods for doing this. I realize that it comes down to cost. However, I think the health of our planet and the future of our children are definitely worth any increase in that cost or effort involved. A recent NRDC study, February 8th, 2024, found that household food waste accounts for over 40% of the food wasted in this country. And as you know, that food is either composted, hopefully, or ends up in landfills where it produces methane, a much worse greenhouse gas than carbon dioxide. I believe that any collection service should be able to service all of Roselle equally without any additional cost or accommodation for multi-unit complexes. Please factor this into your considerations. Thank you for your time.
Thank you. Our waste hauling contract expires in 2025, so we are currently in the process of putting together criteria for that. There are some opportunities that are available for single-family residents. If you enlist in the yard waste program, then you are able to combine food scraps with your yard waste for pickup. One thing that's also available to any resident is a number of food scrap haulers you can individually contact and contract with. That's something we're currently compiling a list so that way we can provide that information to residents if they are interested in pursuing that. There has been from a recycling accessibility or that kind of a use for mixed use buildings, that's kind of currently a spot that they don't have that necessarily uniformly guaranteed, just based on space constraints and other things like that. And that's something we're working with our building maintenance companies to better understand and work with them to better accommodate. So thank you for your comments.
The next one is from Ms. Dunn. If you'd like to come up.
Sharon Dunn. I live in Roselle on Garden. What else did you need to know?
It's, you're good.
Okay. I'm having a hard time kind of understanding this natural gas use here. I've been talking to Jason a little bit about this stuff to try to understand. I was under the impression that from what I was reading initially, it made it sound like the people who had third-party suppliers weren't paying any tax, which is not true. They're just not paying on the gas cost, but they are paying on the delivery. Okay. So my understanding is that the board is trying to figure out if they're going to charge per therm a cost that would, I guess, apply to everyone in Roselle, or if they just are going to charge the 5% tax on the third player part of the natural gas cost. Has the board, first of all, decided which way they're going to go with it?
Nope. The board has not made any final decision on that. So we'll be discussing that more tonight.
Of another question, when I got these links, and it listed all the third parties on it, one of them was Santana, which is my third party supplier. And I noticed that it said that like new customers, they only took new customers going forward if they bundled and had electric and gas together. So my question is that if you're going to charge like the 5% for the third party suppliers, how does it affect the people who have their electric and gas bundled?
So couple of things to so third party providers, what we're talking about is for third party out of state providers, which makes this infinitely more confusing. So you could either have NICOR as your provider, you could have a third party in-state provider, or you could have a third party that is a out-of-state provider. If you are a third-party out-of-state provider, that's currently, you know, they're not taxed the same rate that our in-state providers are taxed at. When we're looking at the tax for third party, we have a limitation. We can't do a percent for those. It has to be per therm. So when we're talking about these third party out of state providers, the rate that's been proposed, at least, and I think the board is universally agreed, like we want to make sure that there's some level of equity in terms of anyone who's getting natural gas in the village is paying a rate. So that has to be at a therm. Now, I think the other decision that needs to be made that the board hasn't made yet is whether or not they would switch everyone to a per therm or if it would remain as a percent. So the difference there is whatever the rate is, that's the rate for your consumption. So kind of like I equate it to a gasoline tax. You buy a gallon of gas, you pay a cent on each gallon, right? It'd be the same for natural gas in a third party out of state provider context. For NICOR or in-state third party providers, I'm looking at our financing to make sure I got it correct because it's confusing for myself even. It's based on your billed amount. So as we know, in wintertime, what do the gas companies like to do? They like to increase the rates and in the summer they decrease them. So that 5%, it fluctuates. So your effective tax rate, when we've seen it, it could be very high some years, very low other years. And so depending on kind of not really your consumption, but more so what's the market price, that dictates what you pay. And so there's either we could keep that at the 5% that it is today or switch that to be at a per therm, meaning both, no matter how you get your gas, you're being taxed essentially the exact same way. So, but that needs to yet be decided by the board.
So if the board decides to go that they're just going to go with the per therm,
Correct.
then the other stuff with the third party doesn't really, it's kind of moot.
Yeah, the only thing that's different is the people who might have been exempt from that tax because of, you know, how the gas was acquired and whatnot, everyone would be treated the same. Now, to your other question about bundling with electricity, it doesn't matter if it's bundled or not. That natural gas use tax is only on your gas consumption. So if you bundled it with that third-party company you talked about, you wouldn't be paying that tax on the electric portion of that bill, to be clear. It would only be on your natural gas portion if you're bundling with a third party like you suggested.
I have a bundle, but
Correct.
I myself personally,
Yeah.
I don't have that, but I just kind of wanted to know how it affected other people.
Yeah, absolutely. Well, and I think, you know, we've done, and we'll see where the conversation goes tonight. I think there's different, if you look at it differently, the way I see it is per therm, depending on the rate that's set, it could actually be an overall rate reduction for people because if you're charging a percentage based on just the market rate, that's going to wildly vary. And so I think by setting it at a predictable amount that for people who are currently paying, it could be an overall reduction in what they were paying versus the prior set. It's at least looking at the last couple of years.
It's probably unlikely. I mean, realistic.
Yes. Yeah, oh, absolutely. So, all right, thank you so much. Do we have any other comments, Madam Clerk? Do we have any other members of the public today that wish to address the board? Let the record show none. We'll move on to officials and staff reports. Before I go on to the agenda items, I want to just thank the city of Bochnia and the Roselle Sister Cities Commission for a great trip that we had to visit them last week. We were celebrating our 2 decades of our relationship. So the mayor of Bochnia presented the village with this lovely commemorative plaque. I also brought some awards from the village of Roselle on our behalf to award them. So I'll put this in our trophy case up here. But the hospitality was fantastic, and I think there's a lot of fruitful things that came out of it. I brought a lot of samples to bring to local businesses, so I'm hoping that we can have some partnerships where we're using either Bochnia products to help sell in Roselle and make new things, or we can send some things to Bochnia as well. And so a lot of great conversation. I debriefed with the Sister Cities Commission President, Mr. Domke, when I came back, so I think more to come from that trip, but very, very good connections were established for everyone, so.
And David.
Yep, well, and yes, that paid my own way. No taxpayer dollars were used for that trip. That's something I'm very sensitive to because we've got a lot of things that we need to do, and I don't need to be gallivanting on taxpayer dollars. So thank you for that reminder, Wayne. Under my report, we've got 2 very important reports that we do every year. And so first we'll do our 2023 annual comprehensive financial report. And this is our first, I guess our first year in a long time with Sikic giving the presentation. I'll give it to our finance director to kick us off.
Good evening. In the packet tonight is the 2023 ACFR, the Annual Comprehensive Financial Report. As you said, this is the first year back with Sikic. So we have Anthony Cervini here from Chickage to present the audit.
Good evening, Mayor and Trustees. Appreciate the opportunity to be here this evening, present the results of our audit of the village. This is as of your fiscal year ended December 31st, 2023. I'm here this evening speaking on behalf of one of my partners, Brian Lefevre, who is the audit partner for your engagement. He is out of town this evening, so highlighting the information for you in this document. Also just, as mentioned, but certainly happy to be back serving the village in this capacity as well. So with this, the annual comprehensive financial report, 152-page, large document, a lot of information encompassed in there. I promise I will give the Cliff Notes version of that for you this evening, highlight the key points. Just from an audit process, just with us getting back as the village's auditors here, audit process really broken into three main phases. Our planning meeting is the kickoff meeting for the audit there. That's where we talk about whether there's been any changes, certainly this year coming back and getting a lay of the land again as part of that process. Our second phase, our preliminary field work, that's where we really do our look at the village's internal controls, do walkthroughs of those controls, talk to staff as part of that process. Final field work, really what you think about as part of the audit process, our detailed substantive testing, looking at invoices, looking at bank reconciliation, doing our detailed testing on that. Within the annual comprehensive financial report, or ACFR as I'll refer to it, neither of which really roll off the tongue here, but within the introductory section, highlighting for you on page Roman numeral 1 is the village's letter of transmittal. It's a very good letter of transmittal. We recommend reading this in conjunction with the management's discussion and analysis, which I'll cover in just a few moments. I always like to highlight the letter of transmittal, though, because it's a unique component. When you have a financial statement report here, most of this information, historical, balance sheets, income statements, things that you're used to seeing, your footnotes there. This is management's opportunity to provide a little bit more of a subjective discussion as to what's going on. Also to take a look at what might come down the road for the future in terms of various initiatives that the village has ongoing. So a very good transmittal letter. Again, recommend looking at that with the MD&A. Also within the introductory section, the last page on page Roman numeral 8 is the Government Finance Officers Association, or GFOA, Certificate of Achievement for Excellence in Financial Reporting. So just want to commend the village for receipt of the GFOA Certificate Award. Goes through various levels of review by GFOA technical staff as well as members of GFOA special review committees. Ensures that all of the required components of this annual comprehensive financial report are present and included as part of that document. Within the financial section, the first piece there is the independent auditor's report. Pleased to present to the mayor and the board that we've issued a clean, unmodified opinion on the village's financial statements. Again, as of for your fiscal year ended December 31st, 2023. That clean, unmodified opinion is the highest level of assurance that we can provide as auditors. It means the financials are fairly presented in accordance with generally accepted accounting principles. Also noted on this page is the implementation of the new standard, Governmental Accounting Standards Board, or GASB Statement 96 was implemented this year. Also noted on the basis for opinions on the top of page 2, you'll find that we issued our opinion in accordance with 2 sets of auditing standards. The first, generally accepted auditing standards, as well as generally accepted government auditing standards, the latter of which is required as the village expended greater than $750,000 in federal awards. About $992,000 of that was your American Recovery Plan Act, or ARPA, spending on that as well. Pleased to report that we've issued clean opinions on that as well. No material weaknesses, no significant deficiencies, no non-compliance in our federal grant testing as well. The other reports that we issue related to this is the TIF examination reports on tax income and financing districts. Clean opinions on those reports as well. I mentioned earlier the management's discussion and analysis you can find on pages MD&A 1, the MD&A notations there. This is the executive summary piece within the village's annual comprehensive financial report. That MD&A is a great place to look if you're looking for the highlights of 2023's results, 2022's comparative information, but most valuably, why those figures have changed from one year to the next. So it takes the figures there, gives you some context as to what you have there. We turn past the MD&A page numbers, the financial section, you have your statement of net position, the first of which, that's pages 7 and 8. This is a economic resources measurement focused full accrual presentation. So intended to take the village's financial statements and make them as comparable as you can to a private entity, a private corporation on that. Includes all of your capital assets, your roads, your infrastructure, things of that nature, as well as your long-term liabilities. Net position, village is able to present positive net position in total for your governmental activities and your business type activities. Looking at that schedule, you do have a deficit unrestricted net position there. That's really driven by your pension liabilities for IMRF, your police pension, fire pension, as well as your other post-employment benefit liabilities. Operationally for the year, governmental activities decreased about 814,000. Your business type activities, which is your water, sewer, and parking, increased about 4.4 million. So overall, your net position for the village as a whole increased just under 3.6 million. Last few items to note for you here in your general fund, your governmental funds balance sheet. This is what you're more used to seeing on a month in, month out basis. Your fund operations here, your general fund, the main operating fund for the village, report a 53% reserve in your general fund balance as a percentage of your 2023 expenditures for that. That is compliant with the village's policy for that, so you're in a good financial position from a general fund standpoint. And then finally, the last piece I'll highlight for you here just on page 14 is the income statement for your funds this year. Your funds essentially were break even outside of your TIF 4, your Urban Park Road TIF fund there. We had the sewer replacement project there as well, the force main there. So with that, I know that was a quick overview of everything there, but I'm happy to answer any questions that the board may have. Thank you very much.
Thank you so much. Any questions from the board? Wayne?
We'll ask one question. What you did a limited look at the internal controls. In the past, you've had some statements about how we could shore that up or make it better. And I don't see anything right now that says that, but you know, like just for the general, and Tom, maybe you can answer this too. You know, like if someone did find something wrong in the system, how do they report it? How would we handle it if there was some not malfeasance, but something that was done wrong that we need to highlight? How do we do that?
Sure. So I can speak to it from an audit standpoint. Certainly if Tom has anything he wants to add in terms of kind of the day-to-day piece of that. But operationally from an audit standpoint there, we look at items that the accounting standards and the audit standards define as what we call their terminology deficiency. So there can be what we call a control deficiency, a significant deficiency, or material weakness. Each of those increasing in severity and type of the comment there. So we also have things that come up during the course of the audit that maybe don't merit putting into the auditor's communication to the village board on that we may have those discussions with management throughout the course of the year as things come up there. But ultimately we look at it and say, okay, if we do find something, whether it be an internal control matter that we recommend an improvement on for that, or if we find a journal entry that related to maybe an accrual or something that wasn't recorded there, that we would communicate those based on the quantitative and qualitative factors that go into that as we're looking at the operations of the village as a whole for that. I don't know if you wanted in terms of anything.
And Tom, how would one of our people in the accounting department, if they found something wrong, how do they address it? You know,
Well, in that instance, or to anybody, if the board or anybody sees
for
anything.
the public to know
Yep.
how we handle ourselves.
Yep, they would report that to the village administrator, and if they didn't feel comfortable with the village administrator, they would report that to the board, either as a whole or individual members of the board, or they can bring it up to our auditors, to our public firm that they could contact if they saw something that.
It's like nowadays people want to know.
Oh, absolutely, and they have that opportunity, whether it is Jason or the board or the auditors, they could do that.
Thank you.
And I think to your point as well, I know we had a lot of feedback as far as things that we could improve upon. I think by creating new segregation of duties, even hiring a new return rather of the assistant finance director, we've done things organizationally to help make sure that we have the right controls in place to help make sure that we minimize the opportunity for fraud. And if it does happen, we've got enough independent reporting to catch that kind of stuff now. So I think, kudos to Tom and, making the case and helping us shift things in the department to make sure that we have the right span of control for each employee. Any other questions or comments? And this is our 34th year of celebrating. I mean, like this was last year, but this is a good time to bring it up. But how many?
I can't remember. It's in my 30 plus, it's 30 plus, yes.
In excellence in financial reporting and whatnot. So I think it really speaks to the not only the policies that the board sets, but the implementation from staff and the work that Tom, your department does. So kudos. I know my numbers, 34. So kudos to you and your team, and thank you again for completing the audit. So
It's already been submitted for the.
So 35th on the way soon. So
Thanks for 158 pages of really high quality reading.
Thank you.
We did just see a live audit there too.
There we go.
34 and he
Yeah.
audited.
To continue on with the theme tonight, we'll move on to another equally important one, our actuarial valuation report for the police pension fund and the firefighters pension fund by Foster and Foster. So,
Before we move on, I just want to say, this couldn't be done, first of all, without the board and the staff that's here, finance, and then Diana Sorcy most of all. She does a lot of the legwork and the review before we get to that final document. So I want to just publicly say that. Yes, here tonight is Heidi Andorfer from Foster and Foster, presenting the police and fire pension actuarial reports. And then if there's any questions, I'll be happy to answer that.
great, thank you. Always good to have you back, Heidi, and we've got good numbers to share this time, so I feel like that's always makes it even better.
Combination, but not bad numbers. Okay, so you notice to add to your reading material here, there are 4 actuarial reports included in your meeting packet tonight. I'm going to focus on 2 of those. I'm going to focus on the funding reports. There are reports that are labeled GASB at the front. Those relate to the numbers that Anthony just presented in and ended up incorporated into your annual financial. So we're going to focus on funding and the contributions you actually need to put into the fund here. We're going to start with the police report. That begins on, I'm going to begin actually on page 5 of our report, which is on page 235 of your meeting packet, the summary of report on the top. This is sort of our bottom line on top page. So the right-hand column is going to be last year's numbers, the left-hand column is this year's numbers for the police report. You can see year over year, there was a 9.3% increase in contributions for this fund. That came through a combination of different sources. So the normal cost is larger due to the fact that there's more actives in the fund this year. So anytime you have more actives, there's more people accruing benefits. Those benefits need to be paid for annually. So we do see an increase in contribution just purely based on head count there. The payroll growth assumption is another assumption that basically guarantees that annually we're going to see a little bit of an increase in your contribution. Basically, the way you amortize your unfunded actual accrued liability, that basically the same thing on the accounting side as the net pension liability. The way we amortize that, it is going to grow each year, just based on how that amortization process works. And then there was unfavorable plan experience in this fund. That was due to a couple of factors. So one isn't real intuitive, and that's the actual return on the fund. Market return was positive. Market return was above the 7% assumption, but we do smooth returns over a 5-year basis so that we eliminate some of the volatility that the market returns can bring to the contribution annually. We do want to try to stabilize that contribution as much as possible so that it is as predictable as possible, so that it can be budgeted better. And so part of that process is smoothing assets over a 5-year period. When we smooth the assets, there are some deferred losses still outstanding that we're rolling in, and that gave us a 5.99% return on this fund versus the 7% that was expected. That loss is part of the unfavorable experience. We had lower than expected inactive mortality in this fund, and then salary increases in this fund were larger than expected. In the past several years prior to that, they were lower than expected. So, every once in a while it's going to cross over. That's just telling me that our assumption is working higher. Some years it's lower. We do watch for that annually. To the extent that we saw consistent highs or consistent lows, we would consider adopting a new assumption to better capture that, but we feel comfortable where we are now. Just to highlight on page 6 of that report, which is on page 236 of your meeting packet, we did make one assumption change this year. This was a scheduled assumption change that has already been discussed with those boards, that we reduced that payroll growth assumption from 3% to 2.75%. The lower you make this assumption, the more you stabilize that contribution. So that decreases the ramp at which that contribution will increase annually. So decreasing this is a good thing. It does have the short-term consequence of increasing the contribution, but in the long term, it will help stabilize that contribution. So it's a good thing to think about reducing that assumption. On page 7 of our report, which is 237 of the meeting packet, we do get into the details here. To highlight at the top here, we do show participant data. Focusing on that leftmost column is this year's numbers. We do show last year's numbers in the prior column. That middle column is just going to show you what the contribution would have been had we not changed that assumption. But focusing on that leftmost column and looking at the participant data here at the top, we do collect snapshot valuation data annually for each valuation. What that means is that we collect data on January 1st. So whoever's in the plan on that date, whatever their status is on that date is who's included. So if somebody retires on January 15th, we'll pick up that retirement in the next valuation. The next section is assets. We do smooth those assets over a 5-year time frame. So you could see that the market value versus the actuarial value has a different relationship here. So actuarial value exceeds market value right now. That's because we have deferred losses that have not yet been reflected. So our actual value is a little bit higher than market value. In the past, that relationship's been reversed, and we do expect that to go back and forth. Again, this is done in order to stabilize that annual contribution. On page 8, which is 238 of your meeting packet, we do show at the very bottom of that leftmost column the funded status, the funded ratio of the plan. This is based on the actuarial value of assets. It'll look at this on a market value basis. It would look a little bit different, and the numbers that you see in the GASB report will show you that. This is focused on the actuarial value of assets, though, because we're focusing on funding the plan. You can see that your funded status did improve slightly from 62.9 to 63.1, despite that negative experience year over year in this fund. Then I'm going to focus now on page 10, which rolls up all of this information into that contribution calculation. So page 10 is on 240 of your meeting packet. So in a perfect world, our annual contribution would be the normal cost plus our administrative expenses, just the cost to administer the fund each year, less the expected member contributions, because remember, the officers are paying 9.91% of their salary towards these benefits. If you were fully funded, that would give you your annual contribution. We do have that unfunded actuarial accrued liability that I mentioned that we're amortizing. It's effectively a mortgage that the village has towards the fund that you need to pay down annually. You do have a systematic method to pay that down, and the village has been making those payments and more in many years. So that's been good to see. But 78% of the recommended contribution of the 2.3 million is that 1.8 million is due to that amortization payment. So eventually that goes away, but it'll take time to get to that 100% funded level. The last page I want to point out to you in the police fund is on page 14. Page 14, which is on 244 of your meeting packet, shows you how the contribution changed year over year and the contributing factors to that. So item 1 at the top shows you last year's recommendation. Item 3 at the bottom shows you the number this year. You can see the various things that contributed to either increasing or decreasing that contribution recommendation. So the big one here was the head count. Normal costs went up because you have more heads accruing. Your investment return of 5.99% contributed about $28,000 to the contribution. You didn't have any deaths in the fund this year, so that's about $28,000 more of contribution. The payroll growth assumption, all else being equal, you could expect the numbers I come back with next year to be about $48,000 higher than the prior year, just due to that methodology. So that's something that you'll see annually. And then that assumption change of about $30,000 by dropping that payroll growth to 2.75%. It increased the contribution this year, but as I said, it'll stabilize that trajectory going forward. Okay, so I'm going to turn now to the fire report, the fire funding report. I'm going to skip you all the way to 288 of your meeting packet. That's
While we do that, just for everyone that's following along at home, so that would make our suggested contribution for this year $2,262,907.
yes. Okay. So flipping to the fire report, that is on page 288 of the meeting packet. It says summary report at the top, and it is page 5 of our report. Same kind of concept here for the fire, but we did see a little bit better news here. So you're actually seeing a decrease in the year-over-year contribution. That's largely driven by favorable plan experience. We did have a reclassification of an employee from disabled to a termination. That reduced the liability a bit. We did have an offset to that for the assumption change, and of course that payroll growth assumption again, all else being equal, we're going to see year over year. But you did have significant favorable experience in this fund. So sources of that were fewer retirements than expected. So generally speaking, in years where we have retirements, we'll see losses, but you didn't have any this year, or that you had less than expected this year, so that gave you a gain. Salary increases in this fund were lower than expected. But that was offset by, again, that market return or that actuarial smooth return of 4.85% in this fund versus. So if we turn to page 7 of our report, which is page 290 of your meeting packet.
Page 43 if you're on the agenda item.
Oh, sorry. You could see or you could see the participant data that we collected to perform the evaluation at the top. So you can see the activity that happened year over year and the head changes. Something worth noting in this fund is that the decision was made to fund to an active head count of 20 heads. So we did footnote that last year. In reality, as of 1/1/2023, there was really 15 actives in the fund. You were actively hiring to get back up to that 20 head count level. But it was, a decision was made that we would be funding to that 20. So basically put in model employees to hold the positions that you were planning on hiring for, to make sure that you were properly funding and not getting sort of a break in that year where you had the 5 heads missing. So we do make sure that we're proactively including that as well. This year, we happen to have the 20 heads, so there was no need to perform that exercise. On page 8, you could see the funded ratio did improve quite significantly in this fund because the favorable plan experience. You went from 65.1% funded to 69.9% funded. So that was a good improvement in the fund year over year. Page 10 of our report, which is 293 of your meeting packet, does roll all of that information together into the contributions. So again, focusing on that leftmost column, normal cost plus administrative expenses less the member contributions would be your contribution if you were fully funded. We do add to that payment, that amortization payment towards that unfunded or that mortgage on that unfunded accrued actual liability of $430,000. That's about 42% of the recommended amount of $1,017,550. And then lastly, I'll point out page 14, the reconciliation again from last year's recommended amount to this year's amount. So you went from the $1.1 million last year to a little bit less this year, about 13,000 less this year. You could see the big items that contributed to that decrease were that reclassification of that person from disabled to termination status. And then you saw the active decrements. There were no retirements this year, so that resulted in a almost $25,000 increase or decrease in the contribution. With that, are there any questions that you have about the contribution requirements for either the police or the fire fund?
Any questions from the board tonight? Thank you so much.
Appreciate it.
Good.
Thank you so much for having me.
That's it for my reports, and we'll have Tom back up here in a little bit to give everyone a slight finance breath catcher. Do we have any trustee reports tonight? Record show none. Do we have a report from the village clerk?
The Roselle Park District's Garden Club will be hosting their House and Garden Walk on Saturday, July 20th from 9 to 3. This year's event features 2 unique homes and 7 beautiful gardens, and you can buy tickets at Platte Hill or online on the Park District's website.
Great. Thank you so much. Village attorney, any report? Village administrator, any report? Treasurer's report. So our May, it's time to find the May financials.
So good evening, thank you. I left my notes downstairs, but I'll be able to get through this. In the report, in the packet tonight, sorry, is your May Treasurer's report. And the revenue of the month is income tax. Village received $613,000 in income tax during the month, and a lot of that, or most of that, is due to, of course, filing of returns in April, and then the village receives that money in May. Not as high as it has been in previous years, but still a significant amount. Page 3 of my report, which is 339 of the packet. I'm sorry, page 340. For the year so far, expenditures are over revenues by about $740,000, but of course, we have not received the significant amount of property tax money that we get in June. So you'll see that in the next report. That'll flip around. And then we'll be receiving property tax throughout the year, the following 4 months. I read today that Cook County should be on time for their tax bills. We'll see it. Believe it when we see it. But it'll be the first time in several years that they'll be on time. Following that is my usual report. I don't want to bore you with more financial stuff. So if anybody has any questions, about the report, I'd be happy to answer them.
Great. Any questions from the board for Tom today?
Oh, I did want to mention one thing, sorry. This is why
So
This
close.
is why I have notes. I just wanted to say, in the general fund, in the grants line, you can't see it, but in the detail, the village did receive the $5,000 from the Schaumburg Mental Health Board for our counselors. So we received that in May, the 5,000 contribution for the counselors. Just wanted to point that out.
Great, thank you. Last call for questions. Thank you, Tom. Appreciate it. We'll now continue on with our agenda unfinished business. First, we have the consent agenda. All items listed on the consent agenda are considered to be routine, procedural, informational, self-explanatory, or non-controversial in nature and will be enacted in one motion. There will be no discussion of these items unless removed from the consent agenda. Are there any items to be removed from the consent agenda tonight? Record show none. Tonight, we have presentation approval of the village board minutes of May 28th, 2024. Authorize the village administrator to approve the purchase of a backup and data recovery solution for the village's information technology network in the amount of $34,688 and 96 cents, from CDW-G, and then adopt a resolution approving and authorizing the mayor to execute a contract by and between the Village of Roselle and American Door and Dock for the Public Works and Police Department overhead door improvements in the amount not to exceed $71,975. Is there a motion to approve?
So moved.
There's a second.
Second.
Madam Clerk, we have a roll call, please.
Trustee Domke.
Aye.
Trustee Forsythe. Aye. Trustee Delapenna.
Aye.
Lisa. Aye. Trustee Prokowski.
Aye.
Trustee Trejo.
Aye.
That motion carries. We'll continue on with community development. Trustee Prokowski.
Thank you, Mayor Pulaski. I'd like to move passage of an ordinance granting a special use for the property commonly known as 470 West Lake Street, Roselle, Illinois.
Second.
Sir, and for the record, this was unanimously considered by the Planning and Zoning Commission at their June 4th meeting. Is there any discussion or questions from the board? Seeing none, can we have a roll call, please?
Aye.
Trustee Trejo.
Aye.
Trustee Delapenna.
Aye.
Trustee Domke.
Aye.
Trustee Forsythe. Aye.
That motion carries.
That is all I have, Mayor Pulaski.
Thank you. We'll move to administration. Trustee Domke.
Mr. Mayor, I'd like to make a motion to adopt a resolution authorizing a letter of intent, LOI, with Lexington Homes for the due diligence evaluation, development, planning for village-owned property at the southwest corner of Roselle Road and I-39.
Second.
Any discussion? Yes, Wayne?
Does it have an expiration date? Just wanted to ask that.
Sorry, go ahead, staff.
There's a section called expiration of LOI, and that talks about kind of how to get out of it. There are some performance timelines in there, for the developer, but at the end of the day, either party can send notice to each other to terminate the letter of intent.
Let's say you're in 2.5 years and nothing's happening.
And we could terminate it with 30 days written notice to the parties, so.
So it'll be just, you think would be
Use an analogy that you've used, we're going steady, essentially. We're dating, and until we decide that there's no fruitful relationship, we can end it on a proper notice. So
not sure clear.
takes it off the market, but it's not taken yet. So non-binding, so
It's a different kind of letter, I think, but that's okay.
we're swapping Letterman jackets, okay? We can ask for it back, though. Any other questions or comments? Could we have a roll call, please?
Aye.
Trustee Trejo.
Aye.
Trustee Delapenna.
Aye.
Trustee Forsythe. Aye. Trustee Lanisa. Aye. Trustee Prokowski.
Aye.
This motion carries.
Oh, I have another one. I'd like to make a motion to adopt a resolution approving and authorizing the execution of a memorandum of understanding by and between the Village of Roselle and the Roselle Arts and Culture Foundation.
Second.
Any discussion? Seeing none, could we have a roll call, please?
Domke.
Aye.
Trustee Trejo.
Aye.
Trustee Delapenna.
Aye.
Trustee Forsythe. Aye. Lisa. Trustee Prokowski.
Aye.
That motion carries.
I do not have any.
Thank you, Mr. Domke. To continuing on, we have nothing under fire, police, or public works at finance. Trustee Forsythe.
Thank you, Mayor Pulaski. I would like to move approval of the accounts payable list for June 24th, 2024 in the amount of $2,271,849.96.
Any discussion? Seeing none, can we have a roll call, please?
Trustee Forsythe.
Aye.
Trejo.
Aye.
Trustee Delapenna.
Aye.
Trustee Domke.
Aye.
Trustee Lanisa. Aye. Trustee Prokowski.
Aye.
That motion carries. That concludes unfinished business. We'll move on to new business. Our item for tonight is provide direction on revenue enhancements and modifications to the village as a home rule unit. So we'll have Finance Director Tom Dahl, Finance Wizard Extraordinaire, Zun.
So in the packet tonight are 3 draft ordinances based on the discussion that we've had pretty much over the last year and a half, but really over the last couple meetings. The first is the home rule sales tax, which calls for a tax rate of 1.5%, which would be effective January 1st, 2025, and then fund capital projects for the village. The village would then receive January 2025 sales tax beginning in April. Be our first deposit.
And if I can interject here, I think this is an important point because I think this is one of the key cruxes of the home rule referendum policy and something that's going to provide the most revenue for the village. And when we see vehicle sticker renewals going out, that's very much so because the earliest we can start to collect our major new revenue source really isn't until April of next year. It wouldn't be effective till January. And we don't have any idea of the, while we have the utmost faith and confidence in the forecasting that's been done, we don't have that in hand until April. So that's why vehicle stickers really must continue for one more year. And really that referendum that we had, or that resolution we passed calling for us to evaluate by the end of 25 is because we need that time to evaluate this piece. So, thank you for letting me.
Thank you. And again, just not only capital projects, but really the IEPA loans that'll be starting for the projects that we're working on. That's where the vast majority of this will go. The second ordinance is the motor fuel tax. Calls for a motor fuel tax of 2 cents per gallon based on our conversations. And this would be effective on September 1st of 2024 and help fund the street improvement program. This would expected to generate about 200,000 annually. We wouldn't see the first deposit until October. And so again, pretty much the same time, a little bit sped up, but we wouldn't really know for several months what this would bring in.
And I think for context sake, Bloomingdale and Hanover Park both have a 2 cent per gallon rate. Schaumburg has a 3 cent per gallon rate. So.
And then finally, the third ordinance presented tonight, it repeals the existing places for eating tax or eating establishment tax and replaces it with this food and beverage tax at the same 1.25% rate that is currently on the books. This would be effective September 1st and would include prepared food and alcohol that is currently subject to the eating establishment tax, but it would expand it to include alcohol sold by establishments that do not sell prepared food, such as gas stations and our packaged liquor stores. And then it would also include a couple restaurants that don't have seating, so therefore they weren't subject to the tax earlier, but now they would be. It's estimated that we would receive about $60,000 more in revenue than we are currently.
And for clarity's sake, we've had an eating a food and beverage tax. I'm trying to think, or a food,
Eating
sorry, we had
establishment
an
tax.
eating establishment tax since 2010, 2011, correct?
2010.
So this has been a tax that's been in the books for some time now, and it's just about kind of in a similar vein to the natural gas, maybe broadening it to encompass other groups that are not.
And then finally is the natural gas tax. I do have at the very end, I have a chart. So the natural gas tax, yes, as you know, we've heard earlier, and any confusion would be my fault, but yes, everybody does pay the 5% gross receipts tax on distribution. There are those that that will also pay it on their terms that they pay for. This would just capture, as we said, or is this the board's direction, which to capture, is to put the per therm rate on all, or just the per therm rate on those paying out-of-state suppliers. We did receive an additional 3 years of therm usage data from NICOR as requested, to include 6 years, looking back 6 years. There are approximately 10,350 total NICOR premises in the village, and about 1,200 of those use an out-of-state supplier. Attached is an exhibit with 6 years of data, and that's on the very last page of the agenda. So the average per therm is about 3.5 cents. It was 3.4 cents, and that would generate about $68,000. So really, what we're asking, and we will bring back an ordinance. We spoke with NICOR legal counsel today. They have specific language that they like to include to make sure we get it correct the first time. And there's an agreement in there as well. So they're just waiting to hear which direction we'd like to go, keeping the 5% gross receipts and adding per therm for those out-of-state suppliers or per therm for all. So just looking for that recommendation.
Great. Thank you so much. So why don't we go down this one by one? I think that makes the most logical sense. So starting with the home rule sales tax, with an effective date of January 1st, we receive receipts for the first time on April of 25. Is everyone kind of comfortable with what we have outlined here?
Yes.
Yes.
I would do the 1.5 still.
Okay. We've got consensus on that one. That's an easy one. Motor fuel tax. So this one, I know we had asked staff to kind of give us some guidance on this. So with this, this is opposed to the home rule sales tax that's administered by the state. This is administered locally. So staff would be responsible for reaching out and also for collecting it, which is why we can institute this whenever. I think the recommendation right now is September 1st, and then we would see that in October. So the 2 cent rate and for an effective date of September 1st. Is that consensus of the board on this one as well? All right, we've got unanimous decision on that one. And then the food and beverage tax. So this is an extension of the current rate that exists, making it really from an eating establishment tax to a food and beverage tax, if I can get the language right in my head. And so similar, mirroring the motor fuel tax, since this is the locally administered September 1st start date with a first collection read on October 1st. Is there consensus from the board on this one as it is provided? Trustee Domke. Absolutely.
Next question. It's about the food, not the beverage. Place that would have a packaged item like chocolate, not necessarily to be consumed on site. Would they have a tax?
No.
Like cheese candy, would she be taxed for a chocolate bar that she sells?
Nope.
Not a food and beverage tax, but a sales tax, yes.
Sales tax, yes.
Correct.
Yes, we can't get away from that one. Okay.
Well, I just want to make it, because it's a very good question, but
Way I say it.
it is tax, but not through the food and beverage tax.
They're not gonna, okay, I wanted to, and then I just wanted to clarify something that I already sent to Jason today. So vendors at the Taste of Roselle are selling burgers and such, that's taxed. Food trucks would be taxed. And at the Taste and at Rose Festival. But the nonprofits that are involved would not be taxed.
If the not-for-profit is doing the selling, so
Right,
for
right.
example, we'll do sister cities. If you're selling food,
Or RACF, any
right?
nonprofit.
If they're specifically selling the food prepared on site, they would not be subject to the.
Okay. Just want to clarify that. so
Mhm.
everybody knows.
Yep. So going back to your question of the candy, so no, in fact, we actually put that in there. I mean, it wouldn't, by the spirit of it, they wouldn't apply anyways, but,
And I think also to your point, with us implementing these with a September 1st date, it's from my understanding, staff's intention to educate and communicate with the business owners. So that way, if they have questions, we're accessible and able to help work through this with them and to make sure this is as smooth a transition as possible. So
Correct. And that is we're working on that now to make sure that they understand what is.
So vending
not-
machines wouldn't be,
No.
the cafeterias. all
Because
that.
it's not a prepared food. But if it's packaged, no, it's not going to be taxed. And food trucks are specifically in there, and we will add village, festival food would be, if they're a for-profit business, they would be paying.
Okay, thank you.
So just to confirm there, because we had a very good question, but everyone's got consensus on the food and beverage tax. Lee,
Really quick, I mean, I would prefer to lower that rate to 1 and just.
okay. But otherwise, we have 5 people in favor of the 1 and a quarter. I'll state, I think the nice thing about these locally administered ones, including the fuel, the motor fuel one, we can make those adjustments as we get more information. So I think that's something that, if we want to revisit that once we have more data, that's something we can absolutely do. And then going to the more complicated natural gas one. So I know we had the additional data provided to the board as far as historicals and what those effective rates would be. And so that brings the 6-year average per therm effective tax rate of 0.034. So I know we've had some back and forth as far as, I think there is consensus on establishing a rate for out-of-state third-party providers. Is that fair to say across the board? I think the question is just, do we want to establish the same rate across the board for everyone, or do we maintain the 5% rate for in-state third-party providers and NICOR users? So, I'll leave it open for board direction on that one.
Yeah, we go to 5 cents per therm for everybody.
5 cent,
It smooths out the revenue stream.
okay. Wayne,
I thought
okay.
there's a lot of different juggling balls in the air with this, but here we could make one thing. So price per therm, period.
I'm at the 5 per therm as well, and the reason I come to that conclusion is because I like it to be, even if a person has changed their provider, I'd like it to be fair to everybody.
We'll get to the rate part. So let's just do per therm versus percent first. So,
Put them on the per
okay,
therm.
per therm, okay.
Per therm.
Lee,
I would do percent.
okay. So we've got 1 in favor of the percent, 5 in favor of the per therm. So going to per therm, obviously the rates are pretty wild. And so for everyone's benefit, you go to 2018, the per therm was 0.25 on the low end. And then you go up to 2022, which was the highest mark, which it was 5 cents per therm. So the average is currently 0.034 cents. But there has been a lot of fluctuation in what that price effectiveness is at our percentage rate. So I heard a few 5 cents, but what's the board's thoughts on kind of setting the per therm rate? Lee?
Actually, real quick, I mean, if we got down to 4, I might be okay with doing a per therm rate. I think 2020, 2018, 2019, 2020, you're at like the 2.5 cents range. From 2021 to 2023, it's sort of trending upwards. So I think if we settled at 4, I think I'd be okay with doing a per therm. But if we're doing 5, I'm definitely against doing 5 and just doing the 5% per therm rate.
Okay. What's it, Wayne?
I would go with the 4 also, and I just wanted to say too, I did a little math of the 68,000 of projected income of 1,225 homes. That would only come out to $55 a year. And if you add some commercial, it would even be less than that. So we're not talking about a major increase.
I can live with 4.
4. Cheryl? 4.
Four's four.
Okay. So you got consensus to do per therm for everyone, which thank God for me, because at least now I can say one thing to everyone and not have to worry about a table of index for what you have to do, and at a 4 cent per therm rate. And I think this is obviously something that I think now that we are learning how to get some of this information from NICOR, we can continue to evaluate and monitor this. So that way, if we need to come back and evaluate and make changes to that rate to be equitable to our residents, I think that's fair. Based on at least the last 2 years, this would be an effective rate cut. And I know we're literally talking about fractions of a penny here, but I think that is something that we're not just going wild and crazy here. I think we're trying to make this as database as we can. So Anything else from the board on these 4 items? So I know our intent would it be, and I'll get you, Wayne, I think would be to bring at least the items 2 and 3 to the board in July, so we can start with the implementation, and depending on NICOR's ability to help us through it, we might have the natural gas ordinance to us for the first meeting in July. And the sales tax, I mean, we can get that on the board whenever but I think our intent is, we're gonna try to get it all done at once. All right,
If
July.
you don't mind.
That'd be great.
I'd rather have it in.
Hopefully NICOR continues to be as helpful as they've been. So, so closing thoughts from the board, Wayne?
Just gonna say, like we said, 4 cents. Not gonna fluctuate it based on market.
No. I mean, I think my point is we can make a read to make sure that it's in having the intended policy impact that we had. And I think, to Lee's point on some of the consumption information, we can make sure that, it did make sense, right? I think part of this is we can implement these things. And I think there's a healthy dose of skepticism, as there should be, but we can, if we made the wrong decision and over-indexed, we can reduce things, right? And so I think it's just a commitment to make sure that we're making the right decisions, because making the switch makes sense on paper, but we all know that sometimes things can have unintended consequences. So, Lee?
But just a counterpoint to that too, we are putting a ceiling on the amount that someone's gonna pay. So right now, if natural gas skyrocketed in the old system, they'd be paying 5% of whatever that fee is. Right now, we're capping it at 4 cents per therm, so that's the other way to look at it.
That's why I really do see this as for the users who aren't currently paying something, this is definitely an increase for those who are not. For those that are, this is an effective tax rate reduction in my mind, because it is consumption-based, not subject to market fluctuations, and that market has been very wild and crazy as of late, so.
Just turn the heater down in the winter and we're good to go, right?
Or turn it. Any other closing thoughts from the board on these? And again, I say it every time, and I genuinely do appreciate the work, Tom, that you and all of the finance department put into it. Cheryl, Dina, I know you helped give us the foundation to have a really productive conversation. This is our 4th meeting that we've been discussing this at. This hasn't been a rushed thing that we've kind of run through, so I just appreciate everyone participating, sharing your opinions, and we've come to some decent conclusions here, so time will tell.
Thank you very much.
Thank you. We do have a second opportunity for village board public comment. So is there any members of the public that wish to address the board at this time? Yep. If you don't mind, just state your name for the record, but go ahead, go for it. So, and I apologize, my computer just died, so I'm reading the agenda off a very tiny screen. So if I look odd, it's because I'm trying to read an agenda on my phone.
If this is implemented, the 4 cents per
Mhm.
therm. You're on the tax part of the bill, it's gonna say municipal utility tax for Illinois, Roselle, and it's going to take all the therms you use both for distribution and the gas.
Just your total consumption, just your therms. So whatever your so I'm not familiar, everyone's bills are gonna be slightly different too, depending on things. So I don't wanna state something incorrectly, but I think it'd just be whatever your therm usage is times the 4 cents. And that would be your new tax. Before, it would have gone into what your billing rate was and all this other stuff. Now it's just, you used, I don't even know how many, if you use 50 therms, then you're gonna pay $2. So, yeah, absolutely. Thank you. Any other members of the public that wish to address the board at this time? Yeah, absolutely. If you don't mind, just for the sake of everyone at home. Are we gonna buy our own street sweeper?
Contracting it out.
I will let our public works director kind of address that, so.
So we do not have a plan to do that. We've actually been very happy with the contract that we currently have in order for us to purchase a street sweeper, it's a significant investment. It would also require a significant increase in our staffing in order to do that. So it's much more effective right now.
People do you have in your street?
At Public Works, we have 30.
I'd come from.
Sure. We have 7, but they don't just do streets. There's multiple tasks that they perform outside of just street work. So every Public Works departments are structured differently. So right now, that staff is completely booked up all summer long with projects that they're completing.
Never don't seem like left staff. Also, well, how much do you pay per hour to street?
I do not know that number off the top of my head. I'd have to pull that up.
We'll get you an answer. I will say, one thing that we've done since the recession is,
I come from a town, we contracted nothing,
Mhm.
except for finishing concrete, alleys, and new streets. We planted our own trees, we
Mhm.
did everything. And, I come here and I see these contractors all over the place.
yeah, we've definitely, I think when the recession happened, we made a lot of severe cuts to our departments to make sure that we could financially get through that time period. And I think as a result, we've kind of been slower to maybe shifting things back. Now, there have been services we brought back that be direct services that we provide. Others have been slower to start. I think the other big thing has just been consolidation in the marketplace, and just specialized talent has become a problem for us. I think there's always room for improvement on that. So I think that's something that, I don't know the last time we did a review of some of the services we're doing specifically in Public Works, that we can maybe revisit that. But I think, we appreciate your comments, and if you give us your contact information, we can kind of follow up on some of the cost stuff for street sweeping. Oh, we got a quick answer.
So at least based on the contract that the village board awarded in March of this year, Lakeshore Recycling Systems does sweeping in the amount of $75,000 annually.
Yeah, and I guess one thing to add, just kind of quickly, is that Lakeshore has been coming in, this year is a new vendor for us. They've been coming in 2 days and sweeping the entire town in 2 days. That is bringing multiple trucks, multiple people in to do that. So it's very efficient, it's very effective. And then we've had a couple different emergency situations where we've been able to quickly get them on the street, and get some things done for us as well. So it's just another added layer of things to evaluate when we're looking at something in-house versus out-of-house. It's been very effective.
Yeah, absolutely. And if you don't mind,
I just.
that's what we're here for.
Considering that you only have 7 people.
For streets.
I'll
Yes.
remove.
Yeah.
So
No,
I have to say that,
thank you.
to be fair. And I also want to address that lawn mowing situation. Well, so far, so good. And they even lowered the
blade.
cutting of it. So I want to thank you for that.
We'll keep an eye on it. So we're here for consistency. Moving on to other business for discussion only, just discussion regarding a DCEO rebuild downtowns and Main Street capital grant. So I'll turn it over to our village administrator.
Thank you, Mayor. I communicated to the board that staff had an interest in pursuing this DCO rebuild downtown Main Street grant. We spent a little more time today, staff did, in reading the application and kind of trying to determine our best argument that we would have to put forth, including quantitative data. And at this time, staff doesn't recommend moving forward with it. I did present to the board a proposal from Confluence, our design architect who's doing municipal campus improvements, that would come up with a high-level kind of budget and concept for improvements on Main Street, conceivably continuing to go east towards the bridge that will be built, hopefully starting next year. But the overall kind of emphasis of this grant is really about economically distressed towns and downtowns. And while technically ours does meet that definition by DCEO, I think it'll be hard for us to quantify that with sales tax, job numbers, business closures, those kind of things, as this is ARPA money. So there is a nexus with COVID and trying to articulate and argue that the underscored areas are, have significant economic distress, and that our project would help overcome that distress and make them stronger, and just don't feel, given the dollar amount and the competitiveness that these grants do get because it's statewide, that staff at this time is recommending we don't move forward. But I do think we see value in maybe moving forward with some streetscaping scope of work to continue, I think, to kind of build up what we've started here. But I think that decision doesn't have to be made tonight, but rather at a maybe future meeting or capital discussion in the upcoming months.
Yeah, I'll just add to that. I know there's a lot of misconception when we get grants. I think there's a lot of very specialized grants, like Main Street revitalization grants. And so when we go out there, we try to make sure that we're finding the right ones that we think we can score and obtain the money for. That also means that it's not just money that it's like, hey, go spend it on sewer treatment plants or stuff like that, right? And there's a lot of specific programs geared towards economic development and these types of things. And so when we do get these grants, they are significant and very helpful for us. But obviously, we would love to get the grant for some of the things that we need to get done. There's just no grants for those that are available to us. So I don't know if the board has any questions on this one or consensus with. Great. I think we'll have to see what happens. To Jason's point, you know, obviously there's the library's exploring some opportunities. And I think if you look at our 2016 comprehensive plan, which I know Lee and Wayne, you were on the board when that was put into place. We've actually accomplished a lot of that. And so I think there's a case to be made maybe for us to do a comprehensive plan just on our town center area, because frankly, we've accomplished stuff that was supposed to be done in 20 years in the matter of, well, a decade. And so if you think about that, if the library does move forward with things based on public consent this year or in the future, I think we probably need to have a more robust conversation about what's next, because the dream list for downtown's kind of running out, which is a good problem to have. So we'll see what the future brings. With that being the case, is there any other business for discussion only from the board? Then I would ask for a motion to convene executive session with the purpose to discuss real property. No final action will be taken, and we will be adjourning from executive session.
So moved.
Is there a second? Did I do that right, attorney? I got it down finally. It took me 3 years, but I got it down sweet. Could we have a roll call, please?
Trustee Delapenna.
Aye.
Domke.
Aye.
Trustee Forsythe.
Aye.
Lisa. Trustee Burkowski.
Aye.
Trustee Trejo.